All right, thanks everybody for joining today. My name's Wes, and I run the Squeeze Finder system. We're going to do a short presentation here that's kind of an overview of short squeezes, how they work, and then talk a little bit about the Squeeze Finder platform, some of the data that we look at, what are the important criteria, how we score and rank some of this stuff. And then I'm going to do kind of a live demo of the watch list on the website and then talk about what I look for personally when I'm trying to find, trades for myself. Uh, so yeah, want to keep this collaborative, interactive. If you've got questions, just unmute yourself and feel free to interrupt me, jump right in, or put stuff in the chat. I've got an eye on that as well. So I'll try to keep an eye on that, make sure that I answer any questions. All right. So first off, just a little introduction. My name's Wes. I'm a retail trader, like a lot of you guys. I've been at it for quite a while. Had a lot of ups and downs over the years, and I kind of first found short squeezes by accident, doing some kind of weird, option strategies that led me to the first couple of short squeezes that I found in about 2017. And then once I kind of realized what they were, I decided I would, focus some of my trading strategies on trying to find these setups because they're extremely lucrative when you hit them correctly. Um, so I've used Fintel and Ortex and a couple of others, that have watch lists and have all the short interest data and stuff, but they all kind of lacked in one area or another. Um, so, a little over a year ago, I started kind of doing this manual process where I was combining data from a few different places, and trying to put it all together, like with Excel, and just kind of doing basic stuff. But it was really, really time consuming. And tickers come and go so fast these days. Like something will squeeze for a couple of hours and then it's gone. And I just wasn't able to keep up with the pace of the market. So earlier this year, I developed the Squeeze Finder database and started writing all the code for it. Launched the platform in April and have made a lot of changes, a lot of upgrades since then, and it just keeps getting better. Every week or two, I'm adding something new or tweaking on something, and just always trying to improve the whole system. So enough about me. We're going to talk about the mechanics of short selling today, how it works. I'm assuming a lot of you guys probably know this, so I'll be pretty quick. And then we'll talk about like an actual short squeeze and how that happens and why it happens. And then look at obviously the important stuff. How do we find these things? What's the system built on? What's all the data that we look at? And then we'll look at some example results and then kind of how to trade. What's the mechanisms for, placing trades? How do you know when the squeeze is over? That kind of thing. And I do have a few previous wins, but they're outdated from earlier this year, so we can just kind of breeze through some of that stuff. So if you're not familiar with short selling, the main thing to understand is that it's basically a reverse trade. So you sell first and then you buy back later. So the old, adage of buy low, sell high. In the case of short selling, you're trying to sell high and buy low. So you're betting that the stock is going to go down, right? So what happens mechanically? How these orders work? When you decide to sell short, your brokerage has to locate shares to borrow, because how do you sell something that you don't own? You can't, right? You have to sort of theoretically borrow someone else's shares of Apple or whatever stock. Um, and there's actually a synthetic share that gets created in order for you to be able to place that sell order. So there's like a ghost share or a synthetic share that sort of goes into your account, even though it doesn't really exist on paper. So your broker, for a lot of the big stocks, they probably have um, other users that have shares, and they can borrow, shares from those people. There's also, the bigger, what are they called, like clearing houses, and the level of institution above brokerages and hedge funds and things like that. So anyway, the broker will locate these shares from somewhere, and then lend them to you, uh, and that allows you to place your sell order into the market. So your sell order goes in like any other sell order. Somebody out there wants to buy. The person who's buying the shares has no idea that they're buying from a short seller, right? You don't see that on the buy side of the transaction. So once your position is open, now interest gets involved. So there's a fee that is charged for you borrowing those shares. So basically, um, I think it's a daily interest rate, right? So they publish an annual borrow fee, and then that's chopped down by 365, and then that interest is actually charged to your account every single day. So the longer you hold that short position open, the more interest it's going to cost you, right? And we'll talk about that a little bit later when we get into the data and stuff that we look at. But the borrow fee is a very important part of this whole equation. So um, it's just important to remember that while a short seller has a position open, every single day that goes by, they are paying interest to hold that position. Sometimes it's a lot, sometimes it's a little. Whoop. So, what is a short squeeze? I've got this cool little animation here. But basically, it's when too many shorts are in a stock, and the stock starts to run out of available shares to be borrowed. Um, Once the price starts going up for any reason, if there's a positive news or PR from the company, or it was naturally oversold and starts climbing back up, or longs out there want to pick up some shares and kind of take control, and you get a lot of buyers pushing the price up. um, Eventually it builds up enough pressure that the short sellers start to cover it as well, and once they start running for the exit, it creates tremendous buying pressure, because obviously closing a short position means buying the stock. So if you've got a scenario where longs are buying and bidding up the price, and then all of a sudden the shorts start getting out as well, you can get these really crazy movements, right? So it's not uncommon to see 5 to 10x type gains. There have been a handful of those this year. GameStop, the big daddy, went 30x, I think, from low to high over the course of a week or 2 weeks or whatever it was. That was a really lengthy squeeze. This animation on the right is from a ticker called BWV, Blue Water Vaccines. It had a couple of squeezes earlier this year, and just in this little chart, this is a 5-minute candle chart, so you can see it goes up about 20% in just a couple of minutes. But what's really important is the volume bar. So if you watch that volume candle in the bottom right corner, it just freaking skyrockets, and that is the telltale sign of a short squeeze, because there's essentially no one selling during this 5-minute period, right? It's just massive short covering, nothing but buy orders here, right? So pretty cool to see them in action. So how do we find a squeeze before it happens? This is kind of an unanswerable question, but we're doing our best on a day-to-day basis to figure this out, right? It's kind of like solving a puzzle. There's a whole lot of pieces that need to come in together and fit perfectly at the same time. So from a data perspective, a lot of it's the cost to borrow, which I talked about. The short interest percentage, higher number of shares that have been shorted relative to the float, the better. And then definitely share availability. So that's something that we always watch very closely. I keep that stuff updated every 30 minutes on the website because share availability changes a lot throughout the day. And the the best case there that we're looking for is when a stock has 0 shares left to borrow. So we can see that data and we can see that, changing throughout the day. And whenever we see that there's no shares left to borrow, that's a really, really good sign for a short squeeze because essentially, if you think of it like ammunition that the shorts have on their side of the battle, uh, when there's 0 shares left to borrow, it's like they're almost out of ammunition, or maybe they're completely out of ammunition, right? So they're going to start to lose that battle between longs and shorts. So some of the other things that factor in: the market cap, the float size, days to cover. So we want market cap and float size to be as low as possible because small stocks are easier to juice the price. Days to cover is interesting. It kind of helps tell us whether or not a squeeze has already happened. Um, so days to cover is a number that represents how many days of average volume would it take for shorts to cover all the outstanding short positions. So that could be anything from less than one, where we're saying, hey, if all the shorts decided to cover, it might only take them a couple hours, to process that volume. Or it could be as high as 10 or even more, where you're saying, yeah, if every short decided to cover at the same time, it would take 10 trading days worth of volume, to process all of those transactions. Um, so it's a good thing to be aware of. And then a couple of the things that I do differently from some of the other platforms out there. I have an estimate for naked shorting, so we know how many short shares have been um, sold into the market beyond what has been borrowed. So that's an interesting indicator. And then also fails to deliver. So fails to deliver is when the lender who's lending the shares to the short seller, uh, they think they were able to locate some shares, and then at the end of the day, they found out that they actually didn't have any. So they weren't able to deliver the shares that day. What happens is the SEC gives them 35 calendar days in order to locate those shares. So that happens constantly on all kinds of stocks. But when we see a high number of FTDs, that's when we kind of know that the big institutions that are lending these shares out are not able to actually find the shares that they're lending out. And it's a very controversial topic, but I built an indicator that goes into the system that looks at that specifically. And then the last thing, super important, has there already been a squeeze? And that's kind of, um, I don't know, one of the first things to look at, right? Because you're going to get a lot better risk return, or risk reward ratio on something that has not squeezed yet. Now, a lot of stocks will squeeze multiple times, right? I think it was ATXI has squeezed like 3 times in the last week. So you never know for sure if something can run again or if the run is over. But certainly we want to be aware of it, and we don't want to just be, buying something because all the scores look good. If the squeeze already happened a couple of days ago and we were, a little bit late to pick that one up on the list, we don't want to just, chase stuff. So now I'll talk about the Squeeze Finder system just a little bit. So it's essentially a big database. I've got roughly 5,000 tickers that come in each day. I refresh that info. I pull in data from several different places, companies that you probably heard of, and then I average a lot of it out and blend certain things together to smooth out inconsistencies, because one of the biggest problems I had when I was doing this by hand is, one website would say the float size for the stock is a million shares, and then a different website would say it's 10 million shares, and who do you trust, right? So eventually I decided I'm not going to trust any of them. I'm going to take all of that information, put it together, and hopefully be a little closer to the truth, right? So one thing that I conceptualized at the beginning was I wanted to make this easy for people who haven't done a whole lot of research on short interest. So instead of giving specific values for things, I came up with this idea of scoring, right? So when you look at the squeeze finder list, you're not looking at hard data or hard numbers. You're looking at scores that are essentially rankings, and most of those scores are an X out of 10 type of value. So um, hopefully, it's a little bit easier for most people to kind of jump in and understand when you see something that's higher than 10. It's like, oh, this is a very extreme value. Let's take a closer look at that, ticker. So I do have a weighting system as well, because certain criteria are more important to the whole squeeze setup. So some of the scores I cap them at 10, some of the scores I cap them at 20. Some of them can go all the way up to 50, right? So if you have one particular score that's really, really strong, it can bring up the whole average, um, which is the squeezability score. I should have probably made a bullet point for that here, but the squeezability score is the average of all the other scores, and that's how we keep from number one to number 25 on the list. So then, as I mentioned earlier, recent squeeze is considered a red flag. You just want to be aware of it, and maybe not try to chase stuff once it's already squeezed. And then, as far as the data updates, I pull in everything manually once per day in the morning, and then I do have certain data that is updated automatically every 30 minutes and published on the live watch list on the website. So here's an example from today. So this is just a quick screenshot of the live watch list with um those bits of data that are refreshed every half hour. It was from about an hour ago, hour and a half ago. So basically, looking at this, it's sorted by squeezability, right? So recently, I changed this from being a whole number to a percentage. I think that's easier to understand. And this term comes from the combination of squeeze and probability. So squeezability is literally like the odds of a squeeze happening. Occasionally, rarely, but occasionally, we do get tickers like phase where the squeezability goes over 100%, because there's so many extreme values that literally, according to the math that I've built, there's we're saying that it's like an absolute certainty that this ticker will squeeze. And phase actually did. It squeezed back about a month ago. It's been a while, but it did have a decent squeeze. It roughly doubled in price. Wasn't a full squeeze, but it proved that the squeezability score does work. So as you can see right now today, there's only kind of three really good setups: phase, ATXI, and Pixie. And unfortunately, if we look at the recent squeeze column, those three are all 0 or -10, meaning there's already been some sort of squeeze activity. So it's not a fresh one, but it doesn't mean that you should completely ignore it. There might still be a good trade there, especially watching the charts and whatever. So something I added recently was the color coding system. So yellow values are considered kind of high, or a little bit above average, and then orange values are extreme. So when you take a look at this, and we'll jump onto the live website here in a few minutes. But when you take a look at this, you can kind of see where the hot the hot tickers are, right? Especially if you just look left to right and see how many orange values there are. You can see as you work your way down towards the bottom, there's a lot more gray and a lot less color. And then obviously at the top, there's a lot more color. So we'll take a closer look at this when we jump on the real website, but this is just kind of an example. So how do we trade a short squeeze, right? As far as using Squeeze Finder, we definitely want to keep an eye out for new tickers on the list. Now that we have the live watch list, I mean, you can update that thing. I would be looking at it at least once an hour and just doing a visual check to see, what's been added to the list today. Because a lot of times these things will show up, and then later that day or maybe the next day is when the squeeze will actually happen. So you have to kind of be quick and paying attention. Um, Really, we want to see the squeezability score above 80% or preferably even 90. I usually don't chase stuff that's down in the 60%, 70% type of range. There are often a lot of squeezes that come from tickers in that range, but it's just too hard to pick which ones are actually going to go because there might be 10 or 15 on the list that are 60 something percent chance. So how do you pick the one that's gonna squeeze this week? It's really difficult. Um, Definitely want to check the no recent squeeze score and all the other scores. Being above 5. 5 is kind of considered the average for most of the columns. So um, you want to look at where the strengths and weaknesses are. And then it gets into the basic trading stuff, right? You got to look at charts. I'm not best with technical analysis, but I've got people I can lean on for that, and always trying to learn more. Uh, Check out the company. Go to their website. What are they doing in the news? Is there some kind of story? Is there some issue that they're having, and that's why there's so much short interest, right? Are there any catalysts coming up? Is there going to be a share buyback or earnings or something that could propel this thing? And then a good thing to understand is why are there so many shorts in the stock? What are the short sellers thinking? Is there a chance that they might be correct in their thesis? Like one of the big ones earlier this year was Revlon, and they announced filing for bankruptcy. So guess what? All these shorts piled into the stock. And if a company might be going bankrupt, well, guess what? They're probably correct. Most important thing is just don't get left holding the bag. I've got a new feature called the Juice Target, which I've had a juice score around for a while, but I recently converted it to an actual price target. And that's really a game changer because, at least based on the math, we kind of know theoretically what's the price where the squeeze should be about done. And that helps us, not become bag holders, right? And even recently, I've had some good trades by turning around and betting against the stock after the squeeze has happened. So I see something squeezing, I missed it, I didn't get in early, but there's still money to be made on the way back down. Once something hits that juice target, you can start betting against it, um, and have a nice trade on the way down. Some other rules about when squeezes are over, and this is just based off of my experience. If you see that 100% intraday gain, I mean, you really should be taking profits. Sometimes these things run for a couple of days, and there'll be like a 20% day and 30% day, and you're like, oh man, it's gonna keep going, it's gonna keep going, and then you have like this huge 100% day. It usually doesn't last. That's usually a sign that the squeeze is over. And I've seen them go up 100% and come all the way back down to being like green 10% by the end of the day. Like lunchtime, it'll be just that straight vertical line. And once the squeeze is over, new shorts will come in and just smash it all the way back down, to where it started. Another good sign is upward halts. So if something gets halted up on the way up, two or three times, that's usually a good sign that the squeeze is happening and is closer to being over. And then another sign is the share availability, right? So on Squeeze Finder, that score goes from 0 to 20. So we'll see that be, pegged at 20 for multiple days or even sometimes weeks, where there's literally just 0 shares available for days and days and days. Once that score drops from 20 and recedes a little bit, that's a good sign that pressure is easing up and short sellers are now available, or short shares are now available for borrow. So it's putting that ammunition back on the shelves for those shorts and giving them some ammo to fight with. So we don't want to see those shares become available. I've had tremendous results using that as an indicator to exit a trade, because literally, like, shares will become available and then within an hour or two the price starts selling like clockwork. So hopefully those are a few good tips and tricks. Does anybody have any questions about anything on this slide? I got my eye on the chat right now, or you can just unmute yourself and ask away. All right, I guess we'll keep going. So I had a few previous wins earlier this year. Redbox came onto the list at $2, and I think it ended up going to 10 plus 12, something in that range. Blue Water Vaccines, I showed that little video clip earlier. That doubled twice, once in April and then again in May, or 2 weeks back to back, I think, in May. SST went from 18 to 34. CYN went from $2 to $6. You guys get the idea. On average, I've been finding about 5 tickers per week that run, say 50% or more. It's been a little less. September was kind of a disappointing month in the markets, but hopefully we'll get back to some bullish trends here, and we'll start seeing some more squeezes pop up. All right. Any final questions before we close out the PowerPoint? Oh, I see somebody typing in chat, so I'll hold here for just a minute. Oh, Pussy Professor played BWV 5 or 6 times from the list. That's awesome, dude. Thank you. Sleepy Cat is asking what would be the next pick. So let's take a look at that here in just a second. I'll close out this PowerPoint and we'll go look at the actual website. We'll see what's kind of hot right now. Hugh Noggin, do you trade options on these, or do you buy the stocks themselves, or a mix of both? Definitely a mix of both. So for if I'm getting in before the squeeze and I'm fairly confident that the stock is going to squeeze, but I really don't know when, I'll look for options dated within the next 2 to 4 weeks, and I'll usually do long call spreads, and usually really far out of the money. It kind of depends on the price of the stock, because as you guys know, like, options chains get very, very different if you're talking about a $5 stock versus $100 stock. So if it's a $100 stock, I'm more likely to do spreads and maybe go up, 50% from the current price. So if the stock's at $100, I may look at like 150 over $160 call, which I might pay a quarter or 50 cents for that $10 spread. And then I'm looking for like a 20x to 40x type of gain on that trade, hoping that the price exceeds $160 during the squeeze. If it's a very cheap stock with options, like say it's a $5 stock, I might be able to get, like an $8 or $9 call for a nickel. And if you can buy, a standalone contract for under, say 10 cents, then I'm less likely to do a spread and I'm more likely to just stick with a single call contract if it's cheap enough. But I don't like paying the insane time premiums that are associated with these stocks because basically, once the short interest is building up and it looks like something that might squeeze, the IV for all the options goes through the roof. And like on that $100 stock, I mean, you might be paying, $5 or $10 per share for $150 call contract, which is, just stupid. So that's why using the spread and, buying the 150 and selling the 160, um, you're reducing that time premium by quite a bit, and it's not as painful of a position to be in if the stock does not squeeze. Does that help? And then, so let me answer the other side of the question. Right? Is if if I'm late to the squeeze and I feel like it's already happened, I'll keep an eye on it. And when I feel like the squeeze is over, I'll either sell call spreads or buy put spreads. Again, kind of depending on the price of the stock and the chains and stuff. And I had talked to Salsa a bit in college about maybe doing another presentation on option spreads and when to use spreads versus standalone contracts. So maybe we can do that in a week or two, and I'll get into some more details and maybe pull up some example trades and stuff. But yeah, the short answer to your question is yeah, buy the shares, buy calls. Once the squeeze is over, start buying puts. I mean, selling calls is always safer than buying puts, but buying puts is usually more lucrative. So it's just up to you, how much risk you want to take and what sort of a risk reward profile you want to get into with your trade. And that's the really awesome thing about spreads is that you can sort of define that stuff for yourself in many different ways, and you know um, create the type of trade that's most comfortable to you versus just putting it all on YOLO calls or YOLO puts or whatever and hoping for the best. Cool. So let me drop out of PowerPoint here and pull up the watch list for today. Let's refresh this. We'll have current data. All right. So just to recap, my website is squeeze-finder.com. I offer a couple of different types of subscriptions. There's the old daily email subscription, which is a once a day Excel spreadsheet that I send out in the morning. And then the newer, more advanced subscription is for this live watch list. So this page on the site pulls from the database every 30 minutes. And essentially, this is locked down for subscribers only. So you will be able to see this on the website unless you've got a subscription. But somebody asked what was hot today. Let's see. Sleepy Cat. Based on your current list, what would you pick next? I mean, I hate to say it, but there's just nothing like totally awesome or obvious right now. For those of you that have subscriptions, I did want to share looking at the different columns and which ones are most important. So for me personally, I start with the recent squeeze, the cost to borrow, and the shares available. This is like the holy trinity of short squeezes. So essentially what I'm doing is looking straight down these 3 columns and trying to find one that's got all oranges across the board, and it's extremely rare. Oh, I hear some audio. Did somebody wanna jump in with a question? Nope, okay, no problem. Um, so it's probably gonna happen 3 to 4 times a year that you're actually gonna get a ticker that comes onto the list, and it's gonna be orange in these 3, meaning, absolutely no recent squeeze, a score of +10 there, a high cost to borrow, which would be over, like, 20, on this scoring system, and then, 0 shares available to borrow, which would be a score of 20. That that scenario is extremely rare, but that's basically where if you see that, I mean, I'm not gonna tell you what to trade, but, like, I will be buying a large position, um, in that ticker, as soon as I see that triple orange here. So as far as today's list, I mean, Beyond, I hate Beyond Meat. I got wrecked hard on that one. I made a lot of money when it squeezed, after its IPO, and then I gave it all back. So I don't like that stock personally, but you can see here we got a 5 on the recent squeeze, which means, it's had a little bit of activity. But some of these are a little skewed right now because the market's been so down lately that, really what this 5 means is that it got somewhere near the juice target of $56 in the last 3 months or so, but it could have been up in the 30 or 40 range, and then it's just been selling off like everything else. So, you definitely still want to check, the chart, and see if it's actually had a good squeeze, or if it just, the price was a lot higher a while back because, we had a bear market rally back in August that kind of pumped everything up. Cost to borrow is a bit too low. If this cost to borrow came up above 5, then I would probably start to get more interested in Beyond Meat, and start taking a look at the charts. Let's see. So Indo, this actually looks decent. I mean, you got yellow on these 2, and then, the recent squeeze is 3. So again, I would, maybe take a look at the chart. I know it was up today. I played it last week and it had a bit of a squeeze. I didn't get the full squeeze, but I did get like a 20 or 30% trade out of it. So, I was happy with that, and I know there's been just a lot of activity. So for Indo specifically, I think that one is more like a let's look at the chart and start doing some TA and figuring out, where's a good, uh, demand zone that we should look to buy. Let's see what else might be interesting here. So FSR, so Fisker. Fisker would be a fresh squeeze if the cost to borrow could come up, right? It's a large cap, so we want to be aware of the market cap and the float size because the overall market trend is going to affect Fisker more so, than one of these tiny ones, right? Like XRTX, with a 10 and a 5 on the market cap and the float. XRTX is going to do whatever it wants to do. It doesn't matter if the SPY is down 4% today. This thing could still run double. Um, what else looks decent? Gosh, Finger. I think that one already squeezed. Unfortunately, it didn't get onto the list soon enough. Uh, so kind of risky there. But it might be worth looking at the chart, and if it quickly sells off back to where it was before the squeeze, then that could be an interesting one to look at. MicroStrategy, I've been playing that one. It's a little slower moving, but kind of consistent. Upstart looks all right. If the cost to borrow came up a bit, you know, base, basically, I guess what I'm trying to say here is that these 3 columns are the key, um, and finding a stock where all three of these are orange, it's it's very rare, but it's a very, very good uh, scenario. That's the best type of scenario that we're going to find, um, on any given day, is where all three of these are orange. But it's only going to happen a few times a year, so you just have to be patient, keep an eye on this stuff, and when you see that bit of magic happening, you just kind of got to dive in. Um, so let's see some of the other stuff to look at. Naked shorts and FTDs. Again, you're just kind of looking for those orange values. One of the newer columns here is the social sentiment. So this is interesting. I found a source for Reddit posts. So this is based on Reddit only, not Twitter or StockTwits or any other social media. But basically, I came up with a ranking system from 1 to 20 that takes into account the number of mentions on Reddit and the trend of those mentions. So if the ticker is trending up, it gets a kind of bonus score, and if it's trending down, it gets kind of subtracted. And this is one of the values that's updated every 30 minutes. So the social sentiment can change dramatically throughout the day, but it is interesting to keep an eye on. And usually with the social sentiment, I'll pull up the history. So again, you guys that are subscribers that are in here and know the list, definitely make sure that you're looking at the ticker history. So Phase, we know that one has good history. It's been number one on the list for quite a while. So if you're not familiar with this screen, this is a single ticker, but now you're looking at historical scores that are sorted by date, right? So here's today's scores from 9 a.m., noon, and 3 p.m., and this will go again at 6 p.m. And then yesterday and so on back for roughly 30 days, right? So let's see here. So the social sentiment, you can see how it kind of comes in waves, and that's what's interesting to look at. You know what I mean? If we go back several weeks, it was yellow, then it gets kind of hot, and then it cools off for a day or two, and then it gets hot again. So, it's interesting just to kind of be aware of where we are in that cycle. So right here, it was hot. It's kind of cooled off today. Um, so we'll see kind of where it is tomorrow. But the social sentiment is just a good thing to be aware of, especially if something has a one for a long, long, long time, and then all of a sudden it starts getting talked about. If you see that in combination with really good scores, then that kind of helps you with the timing of it. Let's see. Beyond is pretty popular. Pixie, that might be an interesting one to look at. So yeah, so if we go back here, it's kind of that same thing. It was cold, it got hot, and then here the social score dropped all the way to one for 2 or 3 days, right? So if you're trying to get in at the absolute bottom, if this low social score lines up with low prices on the chart, well, that could be a pretty good bottom. Or you might want to wait until the social score starts to roll up a bit, and then buy. You know what I mean? If the scores haven't changed, the squeezability hasn't changed, and you're just sort of waiting on this social sentiment to go up, that can be a good indicator. So it's interesting. And it does factor into the squeezability. So the squeezability percentage will, go up or down sometimes quite quickly, depending on the social sentiment. Cool. So any questions about the watch list? I mean, that's honestly, my formula. I look for these three right here. And ideally we want to see fives or higher on every other value, but it's very rare to see that. All right. Well, the last thing we can look at is the ticker search. So this would be for those of you who are not members on the website yet. But if you want to look up our scores for any particular ticker, you can do that here. So if we just put, say Apple, um, as you would expect, it's got a pretty low score, 36% chance of a squeeze. The juice target is really low because the short interest is really low. You can probably ignore the naked shorts because these values are so small that there's probably some discrepancy in the data. Share availability at 15. That's interesting. I would want to maybe take a closer look at that. Again, it's showing a -10 on the recent squeeze because it has sold off quite a bit, and the target for a squeeze is not very high. So Apple was above 140 for sure within the last few weeks, but that's really just telling us that the price action has been weak, um, which is the entire market right now. So during a bull market, this formula will work out a little better. All right. Well, we've not quite covered an hour, but I think that's all I had for today. Does anybody have any final comments?
I personally do not, but I do appreciate